Yo, what is up, everybody? Welcome back to krabsfx. Today we're going to be going over my very own trading plan. This is my plan that I'm following right now. So if you guys want to follow along, see how I make sure I stay disciplined, this is my own plan. I have a link to this template in the description, inside of my Discord, inside of the free resources tab in there. So hop into my Discord right here, free resources, and you guys can find this right here, trading plan. And then you guys can make yourself a copy right here, hit make a copy, and then you can have your own that you can edit, and you can switch up everything in here to adjust it to your own specific rules and your own criteria. So yeah, right now we're gonna go over my own. So first off is my trading window. This is the only time that I'm looking for my entries, and this is between 9:30 a.m. and 10:30 a.m. Eastern Standard Time. And what this is pretty much just like a kill zone for me to look for my trades. This is a time that I've back tested, and it's proven that my setups work between these times. So I'm not just trading like a random time like Asia session or something like that. And something about this time also, 9:30 a.m. is the New York Stock Exchange open, which is a very high volume time, and in between this time is when I have the most volume, and I can literally just use volume itself as a confirmation. I think I had that somewhere here, or maybe not, but I sometimes use time as a confirmation because I know that during this time there will be volume, there will be moves in the market. Not every single day, but most days 9:30 a.m. moves the market. So here are my trading pairs, or not pairs, I used to trade Forex, so I call it that. But here are my trading, we could call this instruments, US 30 and NAS 100, the NASDAQ and the Dow Jones. So these are the only two instruments that I'm going to be trading, and the only ones that I'm going to be allowed to trade. And basically what this does for me, it prevents me from trading random things like gold, GJ, random Forex pairs, and I'm sticking only with the fast moving, very volatile indices, US 30 and NASDAQ. So yeah, these are pairs that I've back tested, and I know that I like the movements of them, and my setups in them work over a long period of time. So yeah, that's that trading pairs. You could throw your own in here if you made your own copy. But here's my trading routine. This is basically what you're going to do every day when you pull up to the charts. So for me, I pull up at 9:30 a.m. Ideally, pretty much 9:20 a.m. I'm marking up previous day's highs and lows. I'm marking up 4-hour fair value gaps, 1-hour fair value gaps, and imbalances that I see, which are basically just gaps as well. And I'm checking for news. I'm doing all this, I would say 9:20 a.m., maybe 9:10, 9:20 a.m. I never like to enter before 9:30 a.m., so I'm not going to be marking up at like 8 a.m., 7 a.m. It's just too early, and moves are going to happen, which basically just wastes your time from marking up if you're not going to enter before that. So I just keep it simple, 9:30 a.m., 10:30 a.m. And then I'm marking up previous daily candle closure, and I determine my bias and my trend for that day. This is something very important, and something I'm trying to stick to is only taking trades that follow my bias, because there's just higher probabilities that if you're looking for an intraday trade following the daily bias, it's pretty high probability that price will end up moving in that direction. I also like looking at the 4-hour for bias. I look at the previous 4-hour and the previous daily closures, candle closures, and based on that, I have my bias. So yeah, that's that. Here are my trade setups. I have the false breakout, which is basically liquidity sweep on the previous day's highs and lows, and this could also be on the Asia highs and lows, but this is the highest probability ones. The previous day's highs and lows are the highest probability areas for liquidity sitting above and below them, because there are a lot of orders in that area. A lot of people got their stop losses there. A lot of people got just big money has orders sitting above and below previous day's highs and lows, and with the false breakout I can pretty much get a nice wick entry on those. So then my other setup, fair value gap fill, must follow bias, I have written on both of these. So yeah, just throw your own setups in here. I'm not sure exactly what your strategy is, so just like I said here, adjust it to your own. For everything, these are just my examples. You guys don't have to follow all this. Make it specific to yourself and your plan and your strategy's rules. Then I have my entries. Some notes on that is 1 hour time frames for entries only. Have multiple confirmations. I would say about 2-3 plus confirmations at least, at the minimum 2. And must be following bias and trend, and because it's the highest probability to actually play out and have that end outcome that you want to get. So here's some entry confirmations I have. I don't need them all, but the more the better per trade. Firstly, time of day. This is the most important thing. I'm never going to trade outside of this time for entries, unless it's like 9:30 to maybe 11 a.m. if it's a slow day and there's no entries before that. But ideally, this is the highest probability time for my strategy when the indices move the best. So that's what I stick to. And then bias, I have previous candle closure. That's one of my confirmations is the trend. So far we got time, trend / bias, and then previous day's highs or lows swept. So what all these are is basically I can combine a few of these and put a trade together, or if it's all of them, which it will rarely be, if it is all of these, that's pretty crazy and that's pretty high probability. So yeah, then I got Asia low swept, false break, same thing as this. Fair value gap fills, just expecting a reaction off of fair value gaps on the 1 hour or imbalances. Must be following bias on this. Price showing rejection, that's a confirmation on its own. If you see price pulling up to an area and it starts to wick at that area, say we sweeping the previous day's highs and it starts to wick, that's another confirmation you can add that it is struggling to push higher. Then you can enter and expect price to continue back down based on your strategy, of course, but that's just what I do for mine. And rejection, price trading into a fib retracement zone is another one of my confirmations. So say, we're just going to clear all this. Say you got your fib. I have specific fib levels I'm looking for price to reach into. I draw my fibs from the previous day's highs to previous day's lows, or vice versa, other way around. So sometimes it could be a nice confirmation when price trades into these like golden zones, I would call it. I'm not sure if that's the exact term for it, but golden zones of the fib, showing you that it's oversold or overbought. So that's just another confirmation. If you guys want to see my fib settings, there they are. Sometimes I use the 50% as well for continuation, and I use these settings for retracement. So yeah, I pretty much draw those from highs and lows, from the previous day's highs and lows. So that's that. And then exits, some notes I got here are exits at old highs and lows, which is basically where liquidity and orders sit. So price will be like kind of like magneted, if that's a word. Price will magnet towards those areas, and that's a great exit. Also, another exit could be higher time frame for value gaps for sure. 1 hour and above, maybe like 1 hour, 4 hour for value gap, maybe a daily gap. Those are all great targets when they're following your bias. Also, for my exits, I have mandatory stop loss to break even at a 1-to-1 RR. Pretty much what this means is the same. Say I entered right here, just hypothetically. Say we're like entry here or something. Yeah, this is actually a good example. Let's just say we got 30-point stopper. Alright, so we entered, price pushed 1-to-1. 1-to-1 RR, so you're up what you risked here, the same size of your stop, you're in profit. So now what you could do, say you're targeting your 1-to-2, but price pushed that 1-to-1 already, you're happy, you're in profits. What you can do is you can move your stop to break even. Now this trade is risk free, expecting it to hit your TP2, but what price did here, it went back down and hit your break even. And what this does, it pretty much prevents you from taking losses, and it helps you stay in the game longer term and have break-even trades and risk-free trades, which is something I love a lot, because once you're in profit, you don't want to come back and lose after being in profit, especially when you're up at 1-to-1, when you're up what you risked. So that's something that my strategy says. So that's part of my exits. Mandatory close full or 80% at 1-to-2 RRs. So that's just one of my rules. I got close full. I pretty much just close full unless my account's in profit. Then I'll maybe look for partials, and you can be a little bit more greedy and extend the move to maybe a 1-to-3, 1-to-4 at most. Here are my targets: 1-to-2s and 1-to-3 risk to rewards. So here's my risk management part of my plan. 1-to-2 bullets a day, 1-to-2 trades a day is more than enough. It prevents me from over trading. When I used to take anything more than 2, even 3, it feels like over trading. You're just shooting shots and hoping they hit. So that's something I like, 1-to-2 bullets. After 2 trades in a day, say they both lost, and I'm looking to take a third, it's not going to be the best setup. It's probably going to be late in the session, and probabilities will just be a lot lower. And something that I've found is anything more than 2 L's in a day, just call it a day, because you're going to lose again, trust me. Or if you get lucky or probabilities play in your favor, you'll win. But I really don't like 3 trades a day. Call it 1-to-2 max. So max number of losses per day, 2. Call it a day after that. Stop loss to break even at 1-to-1s. We talked about that. Stop loss. It's ideal for me to place my stops above old highs and lows if you get the right place to put it. But this doesn't always happen because I use a 30 to 50 point stop on US 30 and NASDAQ, so it's not always going to be able to be above old highs and lows, but that's just there because that's what I ideally want. It's not mandatory, but it's just there. And then max total trades per day, 0-to-2. Normally, if I take a win on the day, 1 trade, call it a day and be done. You don't want to lose that profit when you're up already. But if I were to take a second trade, I would only use half the risk that I made on those profits so that you're still green on the day and you're still up. So here at the end, psychology, discipline to this trading plan, to everything we went over, is key and very important. And not following your plans or rules means you want to fail and you want to gamble and you want to extend your learning curve. Something I always think about is less is more in trading. That's something I've learned and I'm still learning as we go. And less really is more. That's why I have some of these rules in place. These are all for psychology to prevent over trading. That's something I had an issue with before. I would be a super scalper and I would just keep trading 4 or 5 trades a day, maybe even more, just taking whack setups. So these are some rules that help me prevent that over trading that I used to have. I have a rule where if you have 2 winning trading days in a row, you're not allowed to trade the next day. And this is a rule that teaches discipline and really following that less is more. Because if you win 2 trading days in a row, you're up on the week You don't want to give back profits, which is what I've noticed would happen to me at the end of the week. I would give back all the profits that I made that week, plus some more. So this is just a rule for me. These are rules for me. So you guys got to make sure to adjust this to you and your issues that you're having, and learn from that and grow from that. So also another rule I have is if you have 2 losing trading days in a row, you're not allowed to trade the next day. And what this does, this prevents over trading and trading emotionally, trying to make back that money you lost and chasing it from FOMO and greed. And your max number of trading days a week is 4 to 5 days a week. The market's only open 5 days a week for indices. So that's that. Max losing days per week allowed is 3. If I lose more than 3 days a week, I just call it a week, because that is more than enough L's. And you just want to come back next week with a clear mind and focus and slowly get that back. But yeah, this is me when I follow my trading plan. I'm a sniper, but when I break my rules, I take my L's, and that's something I gotta work on. So that's why I made this trading plan. If you guys want to grab this for yourselves, it's 100% free. I have it inside of my Discord, inside of the free resources tab in my Discord, Trading Lab exclusive. This is my Discord I just launched, 100% free, guys. Check this out. We also have the trading plan, the trading journal, which I made a video on previously. If you guys want to check that out as well, it's a full journal where you could track your trades, track your profitability and your journey. So yeah, make sure to grab this for yourself, guys, and make your own trading plan, adjust it to your own strategy. And yeah, that's it for this video. Thank you for watching. Make sure to subscribe, help me grow on my journey, like and comment and share all of that. And that's it.